We go from the highs of the prior bull market to the lows of the recent bear market, tag the 161.8% extension, 61,893 to the T, right? And so if we do the same thing right here, right now, let's drag this over. We'll go from the highs to the lows. Rough estimate here gets us to 174,154.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me is Caleb Franzen, who's the founder of Cubic Analytics. Caleb, great to have you back on.
Been looking forward to this, man. Glad to be here. Let's do it.
Yeah, Caleb, I thought of you as, we had the market crash and all the things that have taken place recently, and want to get your perspective on Bitcoin and what we can anticipate in the short term as well as long term. First, let's talk about what happened, earlier this week and the impact it had on the markets.
Sure. I mean, I think it all really kind of started last week. We had a lot of softer than expected macroeconomic data here in the United States, particularly on the labor market side of things. And I thought it was so bizarre because everyone was just jumping to the conclusion as if it was almost consensus that the economy was just about to tip into a recession. And then over the weekend, we really started to kind of pick up on that yen carry trade, if you will. And from my perspective, that yen carry trade just really presented a massive buying opportunity, both in terms of crypto and Bitcoin specifically, and in terms of the equity markets. And, the price action that we saw on Monday in particular, seeing the VIX, the volatility index for the market, jumping to 65, the highest level since late March of 2020. Think back to that. More than 4.5 years ago, we have to go back to the last time that the VIX was trading at that level. Look at what the forward returns were across the board when the VIX hit that same level in 2020, right? And certainly there could have been some additional short-term volatility or downside in asset prices in the short term. But from a long-term investor perspective, and look, I know people who are going to be watching this, some of them are going to be short-term traders, some of them are going to be medium-term, some of them are going to be long-term investors. But from a long-term investor perspective, when the volatility index gets that high, that's typically a great buying opportunity. And so I think one of the funny things that we've been seeing so far this week, because we've been seeing asset prices really rebound here since the lows on Monday, right? Just drastic price action to the upside. It's been really encouraging. And the beautiful thing, in my opinion, is that's coming on the back of good news is good news for the markets, right? Because the market got too far ahead of itself last week, thinking a recession was imminently here around the corner. I thought that was BS. I wrote 2 newsletters this last weekend talking about how softness is not necessarily weakness, and that softness inherently has been bullish because it's indicative of more disinflation and sooner than expected Fed rate cuts. And so my timeline, generally speaking, I'm happy to talk about this a little bit more, is we're almost certain to get that one rate cut in September. We could debate whether or not it's 1 or 2. My opinion is it really doesn't matter. What matters is the official inflection point in monetary policy and the directional change that we're shifting into, which is now a rate cut regime cycle. And I think that's the key thing for investors to know.
Yeah, great point. And I'm of the same mindset. It's a signal. It doesn't matter what they cut 25 basis points, whatever, right? But we're over the hill, maybe from quantitative tightening on the path to quantitative easing and a more cheaper capital cycle, right? And quantitative easing and things like that.
Couldn't agree more. Sorry, my mom's dog is barking in the background, so I wanted to mute myself there for a quick second. This is, Tony, we were talking about this just before jumping on, but I've been living in Europe for the past 1.5 years, came back to the US just a month ago, and so I'm staying with some family here, so apologize for any background noise. But yeah, no, I completely agree with you. As the cost of capital is going to get cheaper, What we know for a fact, basic finance teaches us this, is that all else being equal, falling interest rates means higher asset prices because we're discounting future cash flows at a lower interest rate, yada, 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 right? And so all else being equal, that should be really good for risk assets. But I do want to remind people, right, context here matters. If we're getting rate cuts as the result of an unemployment rate at 5.1% or 5.3%, and we're seeing initial unemployment claims really tick higher and consumer trends, retail sales plummeting, this is bad news, right? That's certainly not going to be short-term bullish for risk assets. And so my thesis now for the better part, well, it's probably been 12 to 15 months, I've been referring to them as disinflationary or non-recessionary rate cuts. And albeit these are very rare and it requires the Fed to be forward-looking, which they haven't given us much confidence that they are a forward-looking institution. But those rate cuts inherently are bullish if we get them as disinflationary or non-recessionary rate cuts, right? And so I think that is very key. Rewind back to 2019. How did asset prices perform in 2019? Very well, right?
Yeah.
How did they perform in the mid to late 90s? Very well. And so that I think should really kind of be the base case for investors here, because again, the economy continues to be, I've been pounding the table on this for so long, I sound like a broken record. The economy, the labor market, the consumer, everything has been resilient and dynamic. Of course, there are pockets of weakness, but I think it's up to investors to really recognize and understand there has never been a market environment ever in the history of financial markets absent of risk. Risk is always present, right? And so people with a negative outlook, permadoomers as I refer to them as, you know, I go hard on permadoomers on X as you've probably noticed. You know, there is always a myriad of data points that they can point to highlight weakness and an impending doom in the economy. And, you know, I was literally just on a meeting this morning with premium members of Cubic Analytics, and I was talking about this. I was like, look, today, guys, I could snap my finger and I could become a permadoomer on X. And I would have no shortage of data points to highlight. Yet, despite those data points, I could still be bullish because I need to look at the weight of the evidence. We have all these puzzle pieces in front of us. If we're only going to focus on the middle pieces and not the external, it's going to be really hard to build the puzzle. We need to be all encompassing. We need to have this holistic approach and again, emphasize the weight of the evidence. And on that weight of the evidence, everything continues to look resilient and dynamic. And of course, we're having some softening. But all that softening is going to do is help to materialize these Fed rate cuts. And hopefully those Fed rate cuts come in a non-recessionary environment. But again, that's been my base case.
Caleb, I don't know if you agree with me here, but and if this makes sense, but I've seen charts where it shows every time the Fed has pivoted, the markets have tanked. I don't know if it's a buy the rumor, sell the news event. I don't know if it's because something's breaking the economy. It doesn't mean the same thing's going to happen now, but do you anticipate some sort of major correction? And it's not instantaneous. So let's say they cut in September. It's not the market's going to tank right away, but was this the correction that we just experienced? And that's not going to be the case moving forward.
Yeah, it's possible, right? Because the market is a forward-looking indicator. So I think it became extremely consensus after last week's FOMC policy meeting and Powell's press conference that rate cuts are coming and September is likely going to be the meeting. And so, you know, maybe some of that is already a buy the rumor, sell the news because it became consensus, right? I will say so long as the economy continues to remain resilient and dynamic on the aggregate, any of that sell the news event, I'm going to be buying the shit out of it. And excuse my language, but I'm going to be backing up the truck in equities and Bitcoin, the whole nine yards, if we see some of that weakness. Again, I have to caveat that with so long as we continue to see the broader economy stay resilient and dynamic. Again, if the Fed is cutting in response to a crisis unfolding, whether that's domestically or overseas or whatever the case is, then we need to have some nuance here, right? It's not black and white. It's not binary. We need to have nuance. And so again, context is going to matter.
Yeah, and to add to that, it depends on your outlook on the markets. Are you a short-term trader or are you long-term? Because long-term, if you bought, like, for example, that COVID crash in 2020, man, you did well a year later, right? With the markets going up like insane. So unless it's Armageddon, I've been telling people I'm bullish on the markets. I'm buying the lows and I have a macro outlook.
Exactly. No, I couldn't agree more. And I think it's also just important to remember, like, how long does that sell the news event last for, and what's the magnitude of the decline? The simple fact of the matter is no one knows. No one can tell me what that's going to be if it even materializes, right? And so all these people, I remember in January, we're talking about the sell the news event for the Bitcoin ETFs, right? And that was when Bitcoin was at like 40,000. right? And so even despite this crazy drawdown that we just endured, we're at like 58, 59,000 today, I think. And so, how did that sell the news event work for people, right? It's like, just sit tight, have your macro thesis, look at the data on the aggregate, sit tight, rate cuts are coming. And so all these things together should be accretive for asset prices. And it's going to be up to us to change our mind and be willing to adapt and be dynamic with the data as it comes in. I always say it's okay to be wrong. It's not okay to stay wrong. So, 3 months from now, let's say that all the data goes terribly, right? And people are going to be pointing to this podcast and saying, Caleb, you sounded so bullish on the macro, on Bitcoin, on equity, so on and so forth. But how does the data evolve? I have the right to change my mind depending on how that data evolves. I'm not going to be I'm not going to bury my head in the sand and be ignorant of new data that could be disproving my thesis. I'm going to adapt, right? So it's okay to be wrong. It's just not okay to stay wrong.
Yeah, well put. Maybe you could share your screen and show us what you're seeing for Bitcoin in the short term, and then we could talk about long term as well.
All right, here we go. So right now, I think this is probably one of the most important charts in the market. This is just Bitcoin, basically since the end of 2022. And what we're looking at specifically is the 200-day moving average cloud. So I get a lot of people asking me, Caleb, should I be looking at the EMA or the SMA? I say, hey, why not use both, right? So I combine both. I call it a cloud. So in this particular case, we have the 200-day exponential moving average in blue, the simple moving average in red. The key thing from my perspective right here, right now, is this recent breakdown certainly was a bit of a concern, right? Because bull markets are characterized by price trending above key short-term, medium-term, and long-term moving averages. So if we're breaking below those long-term moving averages, ipso de facto, that's not a bullish indication, then we're likely in a bearish regime, right? And so we've had these breakdowns occur in the past, very similar to what happened last August, very similar to what happened just there at the end of June, early July. And what we've seen evidence of, even in the stock market, is that price has been able to get back above that level very quickly, and bullish things can happen thereafter. So again, it's okay to be wrong. It's not okay to stay wrong, right? So we can look at these dynamic levels. We can look at where price is trading relative to them, and then shift and adapt our perspectives based on that, right? And so one thing that I am a little bit cautious about right now, just to be very clear, is the fact that we are now undercut retesting the 200-day moving average cloud. I want to be very clear about this. My expectation is that we will break above it because the evidence has shown us clearly we are in a bull market regime environment, and that past breakdowns have quickly materialized into a reclaim above that level. And so given this massive bounce back that we've seen, basically, I think we got sub 50,000, right? Didn't we retest 49K on Sunday night?
Oh yeah. Mm-hmm.
And here we are, I have our thumbnails right there. We're at 59,500 right now. So this has already been a $10,000 bounce back to the upside, substantial move back to the upside. And in my opinion, this really looks like, they call it like a ball underwater, right? Like a volleyball or a basketball underwater. And when that ball breaches the water level, it's going to fly, it's going to skyrocket, right? And so that's how I see price here. Price is the basketball, and the 200-day moving average cloud is the water threshold level. If we can clear and break above that, I really expect to see strong bullish dynamics, expect to see that follow through kind of take place. So I think right now, this is one of the most important charts because, to be fair, this is valid resistance. Even if we look at this retest that occurred in August, we got rejected off that level briefly, right? This was not, we didn't get right back above it immediately. Even here, back in that July retest, we retested that level and got rejected briefly and then reclaimed, right? So this is, right now, this is the first retest of that level. History has shown us that the first retest gets rejected. Again, I'm expecting for that breakout. The question is when, not if, in my opinion. And so, again, I expect once we do get that breakout, good things should take place thereafter.
Now, we know history doesn't repeat, but it does rhyme. And to your point of Bitcoin going below those moving averages and so forth, I haven't seen much of that historically, but is it like breaking new ground here where it's like, you know what? That's okay. We can still continue. And this is kind of, like I said, new ground for Bitcoin.
Perhaps. It depends on the moving average length that you're using, right? So, for very short-term analysis, I'll be using the 21-day EMA It's very common for price within a bull market to temporarily break below that 21-day moving average and then again reclaim back above it, right? If we're in a bull market, then we should be exhibiting bullish dynamics, right? Bullish setup should work in bull markets by definition, right? So I don't think that this is necessarily new ground. The one thing that maybe has been some slight new ground here is the fact that several times this bull market, I think it was last August it happened, and I believe it might have even happened briefly in October of last year, and then a few times so far this year, is that price of Bitcoin has fallen below the short-term holder realized price. Short-term holder realized price measures the rolling 155-day cost basis of all Bitcoin that have been transacted within that 155 days. And so that's a really powerful on-chain metric. In fact, it's my favorite on-chain metric. And so right now that's trading around 63 to 64,000. So price again is trading below that level. So, you know, again, this is very important. We need to get back above those levels, right? Because again, bull markets should be exhibiting bullish characteristics. If we're not exhibiting those bullish characteristics, then perhaps the bull market is being threatened, right? The thing is, like I said, we've seen those threats happen in the past. Over the course of the past 18 months, almost during the entirety of this bull market, we've seen these breakdowns occur. And again, it's almost like I'm talking about the consumer, I'm talking about the labor market, I'm talking about the economy. Price is resilient. It comes right back. The trend stays intact, right? And so I swear to God, like these two adjectives, resilient and dynamic, describe almost everything in the markets right now and the economy. If we talk about real estate, if we talk about the labor market, if we talk about the consumer, if we talk about the economy as a whole, if we talk about Bitcoin, if we talk about equities, everything has been super resilient and dynamic, right? And by the way, on the back of strong fundamentals, I was seeing it earlier this morning. One of my friends, Matt Sermarino, great follow on X, he was posting how forward 12-month earnings expectations, right? The estimates for forward 12-month earnings continue to hit new all-time highs. So, and this is for equities, right? So this is telling us unequivocally that fundamental outlooks for future earnings, of which current assets are based on, are hitting all-time highs. So what does that tell us most likely about the future for both the economy and for asset prices in the equity market as a whole? They should continue to do well. They should continue to be resilient and dynamic. We're going to have these sell-offs. We're going to have these 10% pullbacks, these 5% pullbacks in the markets. Hint, hint, these always happen. These are common characteristics.
Always.
And yeah, exactly, right? Volatility, risk is a constant within markets. We were talking about this earlier, right? There's never been a market ever that is absent of risk, right? Otherwise, where would asset prices be if we were absent of risk, right? There's always something that people are going to be able to point to as a potential risk to threaten the uptrend.
Absolutely. Now, with regards to Bitcoin and the timing of this bull market, it seemed like the run up to about 74K with the ETF buying put Bitcoin ahead of schedule a bit, right? It hit that, if you want to call it a high, ahead of the halving, which it never did in its history. But now with this slowdown and a bit of a chop sideways, if you want to call it that, it seems to be getting back on track with the timeline. What is your expectation for the blow off top? Some are saying Q2 2025. Some people are saying end of 2025. What is your thoughts on that?
So I've talked about this in the past, and one of the things that I've kind of come to the conclusion about is typically the price of Bitcoin peaks around 18 months after the halving, right? So we had the halving, it was in May of 2020. We had price peak November 2021, basically 18 months. And so considering that we just had the halving in April of this year, that puts us again at October, November of next year. And so that's a very crude, very simple metric. It's certainly not what you should be basing your entire investment thesis on. But if that pattern, that cycle is going to repeat, then it does indicate to us that this market does have legs. Personally, I was not of the belief that hitting new all-time highs for the first time pre-halving was not necessarily telling us that the life of the bull market was going to be shortened. That was not my belief. Yes, I guess you could say it meant that we were ahead of schedule. I don't typically operate on those schedules, neither does the market, right? The market is going to do what the market is going to want to do and how liquidity evolves, right? There's nothing telling us unequivocally that something must happen. And so the fact that we hit new all-time highs before the halving for the first time ever, in my opinion, was not, that wasn't telling me that, oh, this market cycle is not going to last as long, right? And so I have to be, intellectually honest on the opposite side of that, right? The fact that we've had this digestion could perhaps indicate that there's going to be an elongation of this bull market cycle. But for me, it doesn't change the timeline personally, but that's just me.
So Caleb, not financial advice, but what is your price prediction top? And
Yeah.
I know that's a hard thing to answer, but let's say a range, right? And are you using Fibonacci or using Elliott Wave? What type of models are you using to calculate your targets?
Yep. Since the middle of last year, I've been saying price target for this cycle, and I'm not putting a timestamp on that. It's just the cycle target is at least 175,000 on Bitcoin. And again, that's coming from the 161.8% extension, the Fibonacci retracement in logarithmic scale. And so if you look at bull markets historically, if you draw a Fibonacci from the high to the low of the peak of the bull market to the lows of the bear market, every single time we get at least to that 161.8% level, right? And so, for example, in the 2016-17 bull market, we had price, so let me say it this way. The 161.8% retracement at that time was telling us that the cycle peak was going to be 4,500. We went to 19,000 and change, right? So again, this is why I say oh, go ahead.
Could you share your screen?
Yeah. So we're really going to have to zoom out on this sucker, but that's not a problem. And let's go ahead and get rid of this. And I have to move some things around. This is why we do this stuff live, guys. This is how it's so much more fun. And then let me get this on the index level. Perfect. Okay, so what we want to look at here specifically is the 161.8% level. So if we go from the highs of the bull market to the lows of the bear, we can get our price target right here, right? And so in this particular case, that was telling us 4,200 was going to be the cycle peak. But again, we got to 19,000 and change. Let's do the same thing for the last cycle, right? We go from the highs of the prior bull market to the lows of the recent bear market, tag the 161.8% extension, 61,893 to the T, right? And so if we do the same thing right here, right now, let's drag this over. We'll go from the highs to the lows. Rough estimate here gets us to 174,154. So this is why, for me personally, I've been saying my cycle target, just based on this analysis alone, tells us we should get to at least 175. And hey, that's a pretty rosy picture, right? We're trading just shy of 60,000 right now. I'm talking about a 3x here left in the tank. And so if Bitcoin's able to do a 3x, what does Ethereum do? What does Solana do? What do some of the other majors do? Could get very interesting, right? And in my opinion, the price action, this digestion that we've been undergoing here, basically for the past, it's basically been a 5-month consolidation, right? It's been pretty lengthy here. This could basically just be setting up this. To me, this really looks like a launch pad to continue us to that price target, right? I almost don't want to get there in some exponential move. I want to see this take the next 15 months. I'm not in a rush to get super rich, right? Like, hey, if we can guarantee our success by having an elongated market, a steady market of higher highs, higher lows, digestion, bull flags, retest of the 200-day moving average, retest of the hey, that seems super constructive. That seems super healthy. Why rush this, right? Just enjoy the ride, be comfortable, continue to reaffirm that all of these macro dynamics are unfolding in the way that we're expecting them to. And like I said, enjoy the ride.
And what are your thoughts on diminishing returns? Does that impact the price projections using like models like Fibonacci and Elliott Wave and so forth, or not really?
Good question. I'm trying to think if I've done some analysis. I mean, obviously each cycle has had diminishing returns, right? Because when the asset is valued at $1 trillion, it can't, at some point there really needs, unless there's, some major macro shift, right? Like, the US government does announce that they're buying BTC on their balance sheet or something like this, or the Fed or more countries, right? So on and so forth. But barring those kinds of, qualitative fundamental catalysts, we should expect to see diminishing returns in the short term for this cycle, right, relative to last cycle. And, a lot of people have pointed out, like, last cycle was very underwhelming in terms of the length of the bull market, the magnitude of the gains, so on and so forth, the duration of alt season, things like this. And so, again, like, I look at that and I say, in my opinion, the crypto bull market started the end of October of 2023. And everything basically peaked between February and March of 2024. So we were basically in like a 5-month bull market for crypto. And now we've been in a 5-month downturn. So in a way, right, this consolidation, and by the way, man, a lot of these altcoins are down like 75% from their March highs, right? These have been super brutal declines. And so a lot of them, like, look, the chart of Polkadot, it's basically giving back all of its gains. Chart of Avalanche, giving back almost all of its gains. Cardano, almost all of its gains. So a lot of these big time L1s, right? They've really struggled in this environment. The L2s really struggled in this environment. The new cycle coins really struggled in this environment. Even the AI coins, which were showing a tremendous amount of leadership for the majority of 2023 and the beginning of this year, giving back a lot of those gains. This has been really, really strong levels of digestion. And in terms of the time, the duration aspect of this drawdown, it's been just as long, if not longer, than the bull market that really kicked off in October, November last year.
Yeah, great point. So on the topic of altcoins, what are your thoughts on ETH's potential performance as well as Solana? The Solana ETH chart looks good. The Solana BTC chart looks good. What are your thoughts on that?
Let me share my screen because people are going to love this one. This right here is Solana relative to ETH. I mean, could the cup and handle here be any more clear? And literally right now this week, I've had this chart drawn now for probably the better part of probably 1 to 3 months. I can't even remember exactly. And now we're getting the breakout here with weekly candles. This is like picture perfect, picturesque. Maybe this is a top signal. I've been very close to selling all my Ethereum and just front running Solana here. Because essentially what you could do as a trader or as an investor here is manage risk around this breakout, right? Because let's say we fall back below this level. Well, then I would cut that Solana position and maybe move back into ETH, right? Because there's nothing more bearish than a failed bullish setup, right? And the opposite is also true. There's nothing more bullish than a failed bearish setup. And so if we get a breakout here, like we're getting right now, this is indicative of being extremely bullish for Solana relative to Ethereum. The beautiful thing is, because this is such an early stage of a breakout, if we're wrong, our punishment is very minimal, right? Because I'm saying I'm going to place a stop loss on this right down here. And so maybe I take a 10% loss on Solana relative to Ethereum, but in the crypto world, that's pennies, right? In terms of the percent loss, right? If we're talking about a potential, what if we get an extension here to 0.1? That's almost a double from where we are today. So I'm talking about making 80% only to risk 10%. That's an 8 to 1. So I'll take that every time.
Yeah. And another price prediction question, not financial advice. Some people are calling for a $900 to $1,000 SOL. What are your thoughts on where it might reach?
These conversations are so funny to me. Not that you're asking them, but it's like, guys, are we really going to be complaining if we only get to 700 Solana, right?
Yeah.
It's like, oh man, we only got to 700, right? And what, like the price stays around 160. So, we're talking about, what is that, like a 4, almost 5x. So, guys, let's be very grateful if we get to 700 Solana, right? And so, the only other coin that I've done a cycle prediction for was for Ethereum. And when I wrote that analysis back in I think it was in late March, I caveated it a lot by saying it's much harder for me to find clear patterns with Ethereum. Unlike what I was able to do with something like BTC, where every single time we get at least to that 161.8% target. That hasn't necessarily been true for Ethereum, right? But even still with that Ethereum target, basically a lot of my analysis, I had these varying price degrees and price targets, and it was a wide range, but basically getting anywhere between 12,000 and 25,000. I think, yeah, I mean, hey, sign me up, honestly. I think that 25,000 target is pretty ludicrous, but it's what the data's showing. So, when I did that analysis, I wanted to provide kind of a base case and an ultra bullish case, if you will. And so, I was much more comfortable getting to like 12 to 15,000, and even that's like extremely rosy, right? If we're thinking about that, we're trading at like 2,500 today. And so if we're getting to 15,000 on Ethereum, again, it's like, are we really going to be complaining? Like, if we get to 10,000, we should all be stoked, right? Stoked.
Caleb, I would be a very happy man to hit 1,000. Because I've been buying ETH for a long time. So,
yeah, love it, man. So, I haven't done my cycle target for Solana. This is my whole roundabout way of finally answering your question. But all I feel comfortable with is assessing that there's upside. And all I feel comfortable with is assessing that Bitcoin cycle price target is 175. And so we could say, okay, if Bitcoin has 3x upside, maybe Solana has 5x upside. So look at where Solana is trading today, multiply it by 5x and see where it gets to, right? It's going to be a blueprint, a template. It's not law. It's not some religious document, right? So, pick your battles, I guess, is the best way to say it. We all want to come on here and sound optimistic. We all want to come on here and make money. That's why we sign in every single day. It's why we're pulling up TradingView. It's why we're paying attention to the news. It's why we're learning about niche topics like the yen carry trade. I mean, no one was talking about this 2 weeks ago, right? And now here we are. Everyone's had to play catch up. By the way, I've done as little as I possibly can to learn about the yen carry trade because I think it's that insignificant. Okay. So, focus on what matters. And what really matters is price, is trend, because price is just the equilibrium of supply and demand and telling us how many people are coming in to buy and how many people are coming in to sell. And those buyers and sellers theoretically should be making logic-based decisions about the future based on data. And of course, markets can get irrational, markets can get exuberant, markets can get excessively, pessimistic. And so, we need to, as much as possible, to have a balanced head, right? And approach the market with logic. And if that's true, then price is just the equilibrium and is the aggregate of all market expectations, known and unknown. And so price is the arbiter of truth, right? I think that's a beautiful thing, is just to be able to sometimes put your hands up and say, I don't know. I'm just going to default to saying that the market is probably right. It's more right than anything else. It's the most efficient forward pricing mechanism that we have. No one can show me anything better. And so there's something beautiful about defaulting to that and just saying the market knows better than me. And the aggregate expectations of investors are better than my own. And I can maybe pick spots to disagree with the market, but I should always default towards agreeing with the market. So what is price telling me, right? And price still is telling us we're in an uptrend.
Yeah, absolutely. Now, with regards to the short term, a quick follow-up question.
Sure.
We've seen seasonality wise, August, September, not really great returns. So are you anticipating fireworks are going to start come Q4 in October, because we would be past the hurdle of the Fed has cut rates, and markets, people are back from summer vacation, markets a bit more optimistic?
Great question here. I'm trying to pull up a chart of this. Let's see. I think I found this. Okay, perfect. Let me share my screen. So regarding seasonality, I think you're spot on there in that assessment. I think that we should expect to see relatively muted dynamics kind of taking place here, because if we look at the S&P 500 in all years since 1950, all election years, let me be very clear, since 1950, what we typically see is that the market peaks here in August and September, experiences some downward consolidation starting in September, bottoms in October, and then rips to new highs in Q4. And again, this is for the S&P, this is for the stock market, but look, we follow this very closely, and Fundstrat published this in January of this year. And so far we've done a pretty damn good job of following this uptrend cycle behavior, right? And I think this is really beautiful. And so what this is indicating is that, look, we just entered August. We probably have a little bit more additional upside here, but we might give back some of those gains, right, in the stock market. And so if the stock market is experiencing some of that seasonality dynamic, and again, this isn't law, this is just a blueprint, right? This is helpful, useful information. This is not telling us exactly what is going to happen. But I think that it's pretty obvious that markets tend to behave in a very specific way, bottoming just before the election, getting past those fears and ripping higher going into the end of the fourth quarter. And so as we do think about the next few weeks, the next month, we might enter this period of sideways chop followed by a little bit of a downward reset. And again, if that happens, maybe, look, the super interesting thing here, right? One of your earlier questions to me was, is the Fed rate cut in September going to be a sell the news event? And if that rate cut is coming in mid-September, that's like right here.
Yeah.
Right? So, hey, maybe we actually get some confluence of that thesis of the sell the news event and the seasonality aspect going into the fourth quarter, which would, like I said, would be setting up for a massive buying opportunity. I told you, if we get that sell the news event, I'm going to be backing up the truck, whether we're talking about equities or Bitcoin, right? And this is why. This is exactly why.
Great point. I love this chart. And I think, to reiterate what you said, look, this is not an exact
Right.
prediction of what's going to happen, but it's a blueprint, it's a guide, and you still have to pay attention to the charts. You can't just say, "Oh, it's going to happen this time. I'm going to walk away." No, you got to keep up to date with the metrics and the data and so forth.
Yeah, exactly, right. And because look, no one has data from the future. If anyone can show me data from the future, I'd love to see it. Unfortunately, all we have is data from the past, right? So all we can do is set our expectations, our beliefs, our analysis based on past data and the interpretation of that data, right? And again, like criticize the seasonality chart. Oh, it's every 4 years since 1950. Da, 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 da. The market doesn't have, I'm not saying the market has to behave that way. I literally said it doesn't have to, right? And again, it's just all we have is past data. If anyone can show me what the market is going to do over the next 4 months, if you somehow have a crystal ball or if you're a time traveler, take me with you next time. I want to see that, right? So let me know. I'll come along with you. Unfortunately, all I have is data from the past. So
I always tell people if you had a crystal ball, I wouldn't be investing. I'll be go looking for the lottery numbers and just play the
yeah,
lottery, right? Well,
exactly.
yeah.
Exactly.
Caleb, always great stuff, man. Great insights. Appreciate your knowledge. Where can people find you?
Get me on X, Caleb Franzen, Caleb Franzen. Check me out there. I'm almost coming up on 50,000 followers. So, hey, maybe this pod, we flip the script on that. That'd be awesome. And then I write a newsletter every Saturday. It's completely free, cubicanalytics.substack.com. That's on the link in my bio on X. So definitely go check that out there. And yeah, we got to do this again soon, man. This is always a blast. I've really been looking forward to this.
Awesome. And everyone, I'll link to Caleb's Substack and Twitter profile. So, Caleb, thank you, man. I appreciate you.
Much love. Talk soon.